You are listening to chartingwealth.com for Tuesday, the 24th of April, 2018. We see stocks down for the day, gold down, bonds up just a little bit. The S&P 500 pretty much flat. It does technically say that it's down 0.01%. We have basically a red open box candle. So far, the first day of the 5-day candle on the weekly chart. We continue to see the derivative oscillator losing downward momentum. Price percent oscillator pretty much flat. Looks like it could be heading down just a little bit. But again, we have a red open box candle, not a strong down candle. But again, not a strong up candle either. Get a little bitty wick on the bottom, bigger wick on top. Again, not much to say from sort of the way the week opened. But it didn't open zooming up. Of course, last week, that is the week ending Friday, the 20th of April, was a green open box candle with a rather large wick on top. Of course, during that week, we had the 2-day chart crossover going up weekly, still in a confirmed down move. Let's look at the 2-day chart. What do we see? Well, we saw that the 2-day chart ended on Friday the 20th as a red spinning top. What does that mean? Indecision in the market tending down, and of course it was down on Monday. Isn't it amazing how accurate those Heikin Ashi candlesticks are many, many times? Particularly when you use your Heikin Ashi candlesticks with your indicators. And we see the indicator still flat, markets moving sideways. The derivative oscillator flat, price percent oscillator headed up, but not very strongly. We'll continue to watch how things go. This is just the first day of the latest 2-day candle, so we will keep an eye on things, see how things continue to shape up. Look at the 4-hour chart. Of course, the market topped off right there in the afternoon on Wednesday the 18th, has been heading down since then, really for the last day, more of a sideways slide than down. Derivative oscillators going down. Price percent oscillator also headed down. So we'll continue to keep our eye on things. See if maybe we have a crossover going down on that 2-day chart that would set us up for a potential trade. Remember, all things being equal, the market tends to move in the direction of the largest chart. That is the weekly. That is what we saw happen over the course of the day on Monday with the S&P 500. We go to the NASDAQ 100 as depicted by QQQ. What do we see going on there? Well, we have a red, pretty much a red spinning top so far after our green up candle in the prior week. Derivative oscillator losing downward momentum. Price percent oscillator headed down. Now, we'll continue to keep our eye on things and just see how the week develops. What's up on the 2-day chart? 2-day chart crossed over going up back on the 18th. The 2-day candle ending on last Wednesday. Then a red spinning top, meaning indecision. That was the candle that ended on Friday. And so far, first day of the week, we have a penetration going down on the 2-day trend line. Derivative oscillator still gaining upward momentum. Price percent oscillator heading sideways, pretty much sideways. So we'll continue to keep our eye on things. If we do have a crossover on that 2-day chart going down, what does that mean for you? Might be an opportunity to jump into a trade. 4-hour chart crossed over going down back on the 19th. It looks like the not the 19th, on the morning of the afternoon of the 20th, Friday the 20th, although down movement had started on the morning of the 19th. Things had peaked out on the afternoon of the 18th, similar to what we saw with the S&P 500. And of course, over the course of the day, up a little in the morning on Monday, down in the afternoon. Derivative oscillator is heading down strongly. Price percent oscillator kicked over, heading down at a little bit of a greater angle. We'll continue to keep our eyes on the prize, see if anything develops over the course of the week. So far, don't have a trade. So we'll keep watching and see what we see if things actually start moving. Remember, for us to have a trade, we have to have the weekly and the 2-day moving in the same direction. As long as that is occurring, it can set us up after a pullback for a jumping in point. And we want to make sure that our arrow on the 2-day chart reflects the actual right direction. It is going down. The beautiful thing about freestockcharts.com and TC2000, it is so easy. It was going down. Now it's going up. It's so easy to change those things and make sure you have accurate charts. Okay, back to the weekly chart, moving on to TLT, the 20-year bonds, up for the day just a little bit, 0.03. Now remember, we had a weekly vertical crossover going up back on the week ending the 29th of March. Following week, we had some up movement. Then things slid sideways and down. 2-day chart crossed over going down, and let's talk about where we are on the indicators on the weekly before we get to the 2-day. Derivative oscillator losing upward momentum. Price percent oscillator appears to be trying to cross over going down. Hasn't happened yet. We'll just continue to keep our eye on things. Remember, we're using Heiken Ashi candlesticks, so even though price movement was up, our Heiken Ashi shows us average pace, which is what makes the Heiken Ashi candlesticks so valuable. Average pace down. Now, as we look, and we'll zoom in a little closer to the action, the 2-day chart crossed over going down back on Friday the 20th. First day of the latest 2-day candle is a pretty strong down candle. We saw with the crossover on the 2-day chart, the derivative oscillator and price percent oscillator crossed at the same time. A very good sign, usually for continued movement when we see that happen. And we see that the derivative oscillator heading down, price percent oscillator heading down, 2-day chart heading down. And again, we'll just continue to keep our eye on things and see if and when we have a rotation over on the weekly chart. We look at that 4-hour chart. It crossed over going down all the way back on the morning of Thursday, the 12th of April, and then sort of went sideways for a while and then really started cranking over going down in the afternoon on Wednesday, the 18th. So we'll just continue to keep our eyes on things, see what happens, and when things set up for potential trades. Remember, the thing about being a non-Wall Street trader, I hate to say non-professional because I want you to be as professional as possible, but if you're not a pro Wall Street trader, they have to trade. We can wait until conditions get perfect to do our practice trades, and that's what we want to do. We want to follow trends that we can recognize and that are working. And again, this is where the crappy time of the year starts. We're out of the fall-winter trading zone. We're going to get into the summer doldrums very soon. That adage, sell in May and go away, live to trade another day, is again reflective of the crappy summertime trading zone. We're slowly but inevitably finding ourselves moving into. Lastly, we go to gold. What do we see going on with gold? Gold, of course, is in a confirmed down move on the weekly chart. It just won't cross over going up on the price percent oscillator. Derivative oscillator gaining downward momentum. Price percent oscillator spiking over, going down. Gold, like we said, still in a confirmed down move on that weekly chart. We look at the 2-day chart. What do we see? We saw where gold peaked out on the afternoon, on the 2-day candle on the 12th. That was Thursday, and then slid sideways since then. The first day of this latest 2-day candle, a big down candle crossing over going down on that 2-day chart. And again, you see the derivative oscillator and the price percent oscillator heading in the same direction. It's just the first day of the latest 2-day candle, but as we dig closer, we see in that 4-hour chart some nice actual trending. This is when the 4-hour chart actually starts working, is when we have trending in gold. Interesting thing about what gold did, though, throughout the course of the day on our Heiken Ashi candlesticks is hit about the same place. Is that going to be a level of support? Is it going to go no lower? We'll just have to wait and see. But we had a crossover going down on the 4-hour chart in the morning on Thursday the 19th. And again, things down big time in the morning. On Monday, the first day of the week, the 23rd, we'll see how things shape up on Thursday. That's where we are, folks, as we end the day on Monday, go into Tuesday, the 24th. We so appreciate you being with us. We're here every day bringing these charts to you. We appreciate you being with us. We'd love to hear your questions, problems, concerns. Don't forget, our new book is out for pre-ordering. It is Charting Your Way to Wealth, and we want you to have a copy. They are available. Look in the program notes and the emails you get if you are a subscriber, or just go to chartingwealth.com and see what we've posted for the day. You'll see the links there. You can buy your stock trader journals and you can buy our book. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.